Hello and welcome to Business Today. I'm Siddharth Zarabi here at the World Government Summit, and with me is a guest, Mohit Joshi, the CEO of one of India's largest software and software services companies, Tech Mahindra. Mohit, welcome from cold, snowed under Davos to a warm and sunny Dubai. It's been an interesting 15 days, but before we sort of get into the context of why you are here at this summit as well, I just want a top of line reaction from you on the sell-off in tech stocks that we are seeing. It's been triggered by Anthropic, and in fact the Business Today latest issue and the cover story focuses on the AI threat. I spoke with you about that, and you gave us a very layered, very good description, and viewers do read his remarks in the latest issue of Business Today. But Mohit, explain what shifted in the last 5-10 days.
Thank you, Siddharth. Wonderful to see you. And again, like you were saying, from the snows of Davos to the relatively mild February sunshine in Dubai is a nice change. But look, nothing has changed, right? We just met 2 weeks ago. Nothing earth-shattering has changed. Claude just came out with a new plugin for legal services yesterday. And I certainly feel that it looks like a significant market overreaction. As you know, the market has been skittish about the impact that AI will have on SaaS companies. So earlier, the impact was only on the IT services or the consulting companies, which had seen drops in valuation. Over the past couple of weeks, that contagion appears to have spread to the SaaS companies as well, with the fear that AI will replace SaaS companies and services. As we discussed, we feel that there is a significant amount of work that still needs to be done. At the end of the day, this is a technology shift, and every single technology shift in history has proven to be a tailwind for the services and for the software business. There is still a lot of work to be done to move applications to the cloud. There is still a significant amount of work to be done to get the data estates in order. There's a huge amount of work to be done from a simplification and modernization perspective. And we feel that if AI really has such a remarkable ROI, will clients not invest more to implement AI? Will clients not invest more in use cases? Will clients not invest more to get their data estates right?
And right now, the productivity, the best number that I heard was like up to 25%. And people have given me lower numbers also in terms of ROI within a company.
And the productivity really fluctuates very widely, right? So if you're talking about a greenfield estate, let's say you're building a new IT estate from scratch, there you could have very high productivity. It's all new architecture, new languages. But if you're talking about a legacy estate, which is what 99% of the estates are, the productivity numbers are much more modest, right? So I do feel that this is a market overreaction to a very specific piece of news. It certainly appears to have been very widespread, right? So we had Accenture and IBM and Cognizant drop off by 10% yesterday, but we also saw a huge impact on Salesforce and ServiceNow. It seems like a huge market overreaction to nothing that has really happened materially over the past 2 weeks.
Okay, I want to take one reaction. Allow me that, because we've just broken that story on businesstoday.in. This is Aditya Agarwal, General Partner at South Park Commons, and he was formerly the CTO of Dropbox. And he says, I just want to sort of bring it that it's a weird time. I am filled with wonder and also a profound sadness. I spent a lot of time over the weekend writing code with Claude. Something I was very good at is now free and abundant. I am happy but disoriented. He then talks about how he spent his time, and this period is showing him what it is like to be human again. And this has gone viral, 1.2 million views at last count because of what his profile is. Does this capture the zeitgeist of this moment?
Well, for sure. Look, but I think, the software landscape has been evolving for a very long period of time. Right? Let me just tell you, for instance, if in the 1990s, if you wanted to build a website that took in, let's say, e-commerce, right, you would need to hire a consultant to really build the website for you from scratch. If you're looking to build this website in 2006, 2007, maybe you'd have gone to a Shopify, and there'd be some work needed to be done from a configuration perspective. If you're looking to do the website now, maybe you could use it using large language models or using Claude Code, and maybe get a specialist in to do the payment integrations. But the reality is that if you're a large company, on the other hand, that needs to do complex SAP integrations, that need to do complex logistics integrations, you still need somebody who knows your estate, right? So it is, I feel that that subtle difference is being misunderstood. Again, greenfield estates are very easy for for Claude code, but when you're looking at large and complex legacy estates, there is certainly a productivity benefit, but the need for human expertise does not go away.
Okay, the need for human expertise does not go away, and with whatever little experience I have of using products, AI products in my chosen profession, I realize that you can't simply wish away the human. So I completely buy that. But you're talking of stuff that is at a far higher level of scale and complexity. We are in Dubai, and IT is the most global business that we know of. A question that I put to you in Davos, the context was different, but overall, what's the economic and business mood looking like? Is this part of the world more upbeat about their prospects versus other parts?
No, for sure. I think, look, we've been present in the Middle East and specifically in the UAE for over 2 decades now. It's always been a very important market for us. We have over 1,700 people just locally here in the UAE. And it is a market with very high growth characteristics, right? And specifically in certain industries. So, for instance, real estate, retail, financial services, telecom, the government, energy. These are very important sectors for us over here. Our president for India, Middle East and Africa, Sahil Dhawan, is actually based in Dubai, right? So hopefully that gives you a sense of the importance of the region to us, that our regional president is actually based in Dubai.
Okay. Let's also talk about another development. So while there has been a bit of a development that has led to a runoff on IT stocks, our stock market also reacted upwards after the father of all deals, because the European FTA has been called the mother of all deals by the European Union themselves. So obviously the India-America agreement, and we are still waiting for some fine print, but your first reactions to the significance of the moment?
I think it's very positive, right? Look, I think it takes away, from an IT services perspective, candidly, there was no tariff, no direct tariff impact, but it takes away a huge risk element off the table. I feel it gives the certainty to American companies that they can continue to build on partnerships with Indian players, that they can continue to expand their own GCCs, and that this vast pool of talent and very deep domain expertise remains open to them. It is also a sign of maybe the sort of growing confidence that India has, and I feel that the market reaction reflects the reality of increased economic activity, of increased engagements with US companies, and an increased confidence of spend.
The rupee has also reacted positively. And it's clear that this will have a macroeconomic spillover, because this comes on the back of 7 to 8 other deals, including the European Union. And having such pacts with $50 trillion of output is a very, very significant number. Does it help resolve in any way, directly or indirectly, the pressures on immigration that IT companies, visa-related pressures that they face? Or is that a separate sort of road to walk on?
I think that, look, especially when it comes to the US, I think that will be a very different conversation. I don't think it will be related directly to the trade deal. But my own sense, as we've shared earlier, is over time, not just at Tech Mahindra, but all the Indian IT services companies have become a lot less dependent on visas. Like I keep saying, 10 years ago, maybe 70% of the tech-M workforce in the US was visa dependent, and that number has now gone down to less than 30%. So it's a fairly significant shift. We are investing very heavily in building out our workforce in the US. We're investing very heavily to make sure that we're seen as an employer of choice, and that means all the training facilities that go along with being an employer of choice. And we're also working to make sure that the significant presence that we have in Mexico and Canada is also available as a nearshore talent pool for this very important market.
So has the global delivery model and the model that was followed changed only with reference to the United States, or is it a fundamental shift happening across geographies?
I think it has changed globally, right? I think it has changed globally for a couple of reasons. One is, over time, clients have become much more comfortable doing the work offshore. because
and you have visa pressures in many other countries as well.
And I think people are, look, I think clients are very comfortable that the economic case is there for the work to be done in India. They're comfortable, which used to be a situation 20 years ago.
And we have ramped up our digital and physical infrastructure.
And 20 years ago, I think a lot of the concern was around the fact that maybe the very deep, let's say, anti-money laundering skills are not available in India, and so the SME needs to be based locally. That concern has gone away. And I feel COVID really also showed that a fully remote work environment also is feasible and will continue to deliver at a level of productivity. So I think it's a confluence of many factors, partly economic, partly talent related, partly related to a growing confidence in the ability to deliver.
Absolutely, and you make that very, very important point, because clearly India also will continue to press for, and has in all the deals, for our services mobility, because ultimately if people want to access our market for goods, we want access for our professionals, because that is, among other areas, one of the strengths that we have. Mohit, thank you very much for your time with us, for giving us a quick reaction to what seems to be worrying IT stocks, but there have been 3 or 4 or 5 disruptions I have seen since Y2K, when I started covering the IT sector, and I've seen after disruption, after turmoil, this sector has always continued to create value for shareholders, for all stakeholders, and jobs, and hopefully that will continue. Mohit, all the very best.
Lovely seeing you again, Siddharth. Thanks.
Thank you. Bye-bye. With that, it's a wrap on this conversation. We'll see you again. Until then, goodbye.